The major markets experienced another pullback last week as the US-China trade war continues. While there were losses across all 5 indices, the greatest were in emerging markets. On Monday, China announced that they would increase tariffs on $60 billion in US goods on June 1st, in retaliation for the 25% tariffs on $200 billion on Chinese goods that recently went into effect. The global market sold off on the news, and the S&P 500 experienced the largest daily loss since January 3rd of this year. After approaching the 2800 level on Monday, the S&P 500 slowly gained traction with each passing day. On Wednesday, President Trump issued an executive order which banned United States companies from using information and communication technology from a foreign entity that has been labeled as a national security threat. While the order didn't name Huawei specifically, virtually all observers recognize that this is designed to target the company. The impact of this order was clearly visible, as Google announced over the weekend that they would cease offering updates to the Android operating system on Huawei phones in order to comply with the executive order. This effectively severs future Huawei phones from accessing the Google App platform, creating a significant business challenge for the second largest global producer of cell phones. After climbing back up to unchanged for the week on Friday, the S&P 500 fell again as news broke that talks have stalled out again. Literal signs in China showed that the trade war continues to escalate. The Chinese media increased their propaganda efforts this weekend with CCTV6, China's main state-run movie channel, playing multiple mid-century anti-American movies about the Korean War. By Friday's close, there were few sectors that closed with gains for the week. Some analysts have expressed concerns about what the ultimate impact on the domestic market will be. The GSCI Agriculture Index has fallen in recent months as this segment of the market has experienced some of the most pain around this conflict. However, additional sectors could also be affected as the conflict continues to play out. While the equity market experienced losses, the yield curve flattened as longer-term treasury rates fell last week. Additionally, the US dollar index rose 0.7%, returning the index to the highest level in 2 years.